Hi and welcome to Swissquote's Daily Market Talk. It's Thursday, June 12th. The trade optimism is waning as Donald Trump throws fresh threats to his trading partners, while the details of the Chinese deal look like they mostly benefit the United States. So the US dollar is softer this morning, while US equities are pointing at a negative start to the trading day. But Oracle jumps in the after hours trading on strong quarterly results, while Nvidia CEO Jensen Huang feels optimism regarding the European technology and quantum companies. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. So the relief that the US and China may have reached some kind of a trade agreement that could relax the Chinese exports of rare earth metals toward the United States, in exchange of letting the Chinese students study in American universities, remained quite short-lived yesterday, provided that many sticky points on that front remained, quite sticky beyond these cited points. Donald Trump apparently expects the tariffs to remain where they have been set in Geneva earlier last month, meaning 10% tariffs for the US exports toward China and still 55% tariffs for Chinese exports toward the United States, while there are no news or no progress regarding the US technology exports toward China. So in summary, the US looks like they got what they wanted in the critical rare earth area, but China is still leaving the negotiation table with nothing much than a few student visas. So I don't think that this smells good in the medium to long run. Even less so as there are rumors right now that the European Union will hardly ink a deal before July deadline, and Trump threatened other Asian nations with fresh tariffs, saying that his administration will be sending letters to these countries within the next 2 weeks to inform them about the unilateral tariffs to pressure them. So it's not really good news. US Treasury Secretary Bessent, on the other hand, which has been a little bit softer than that, and suggested that they could eventually extend the deadline by 90 more days if they believe that the countries, the partners, are demonstrating good faith. And this man is pointing as a major candidate for the next Fed president. Mind you, besides his very, very obvious connection and ties to Donald Trump and his push for lowering the interest rates in the US despite the inflationary risks posed by the trade uncertainty and the supply chain disruptions resulting from this trade uncertainty and tariffs, if this man is appointed prematurely as the next Fed president, because Powell's term will not end before May 2026, it will create a shadow Fed, and his conflicting opinions about where the rates should go could obviously have terrible consequences for the Fed's credibility. But that's obviously a deeper discussion subject that we are not going to cover today. So, coming back to the markets, optimism is waning, as I said. The Hang Seng Index is down this morning after yesterday's peak. The Japanese Nikkei is trading lower as well. The Chinese CSI 300 Index is flat, and stocks in Australia are giving toppish signs as well, near their February high levels, while the US and European equity futures are all pointing at a bearish start to today's trading session. Now, yesterday, the S&P 500 advanced to a fresh high since February after the US CPI update printed a set of weaker than expected inflation numbers in the US in May, both on monthly and yearly basis. The latter actually fueled the dovish Fed expectations and sent the US 2-year yield lower throughout the session, hence boosted stock valuations as a result of it. The 10-year yield also eased to 4.40% level on the back of relatively strong 10-year bond auction from the US, but the post-CPI rally in equities remained short-lived, mind you, as investors around the world quickly moved to the sidelines ahead of today's most watched and most expected 30-year bond auction in the US that could maybe, but just maybe, remind investors around the world about the US exploding and unsustainable debt levels. But if today's 30-year auction goes well, there is a chance that we see the US debt worries ease. Yes, the market and investors are not always rational, and easing debt worries, if they are not accompanied by soaring trade news, could actually be a reason to support equities. A bad auction, on the other hand, could revive the US debt worries and send the long-term yields higher and weigh on the market mood, along with wobbling trade headlines. In the FX markets, the US dollar is significantly lower, significantly softer across the board post the CPI data of yesterday, and on the back of renewed tariff and debt worries. The euro dollar finally cleared that 115 psychological offers to the upside and is consolidating above this psychological level this morning, while cable is back above the 1.35 level. The announcement of spending details from Rachel Reeves yesterday had a little impact on the market mood, so no surprise here is a good surprise. The dollar yen, on the other hand, is clearing the 50-day moving average support to the downside this morning on the back of a broadly softer US dollar, of course, while gold is up for the second trading session as the yellow metal is back to amassing safe haven demand on waning trade optimism and rising trade worries. But not everything looks bad, mind you. So I'm going to finish today's market talk on an optimistic note, if you will. Oracle jumped 7.5% yesterday in the after hours trading on a set of better than expected quarterly results and also a bullish outlook thanks to AI. The company said that its cloud infrastructure revenue jumped 52% compared to the same time last year, and it is expected to grow over 70% in the fiscal 2026. Then their capex is expected to exceed $21 billion on fiscal 2025. That's up sharply from under $7 billion the prior year, as another indication that the AI investments remain undoubtedly strong and robust. And Nvidia, which is obviously a major barometer of AI investments, topped near the $145 per share level yesterday, and that was even before Oracle results, and should see the positive wins from the supportive AI news and more. And more because Jensen Huang, so the company's CEO, is paving the way toward a new revenue stream that could actually be huge and that could make investors somehow forget about the company's Chinese misery, and it is the quantum computing. He said at an event in Paris yesterday that the quantum industry is now reaching an inflection point and could already help solving some interesting problems in the coming years. That statement came in contrast with his previous view back in January this year that useful quantum computers were probably decades away. So that day he had sent quantum stocks under a bus, remember, but yesterday he sent some of them rallying. Quantum computing jumped, for example, more than 25% yesterday, but not all of these companies managed to hold on to their gains. Defiance's quantum ETF, for example, ended yesterday's trading session with a slight loss after having hit a fresh all-time high level still. So the space remains very interesting for tech investors. Now coming back to Nvidia, Nvidia's chips could be used to support the quantum technology, and their entire quantum algorithm stack will be available and accelerated on its Grace Blackwell 200 chip, writes Bloomberg. So it's going to be a nice play for Nvidia. Other than that, Jensen Huang said that the European computing capacity will increase by a factor of 10 over the next 2 years only, and announced that it is teaming up with the French Mistral AI to build an AI cloud together. So you can't buy Mistral AI because it is not a publicly traded company, yet we can have some exposure to European technology because Nasdaq's European Tech Index just hit a fresh high yesterday. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.